Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with December 2nd's market wrap-up. First of all, I'm going to start with the S&P 500 like I normally do, and I want to show you that today's day seemed bullish, but after yesterday's 8.93% loss, today's gains don't really amount to a pot of beans. And also, this volume shows here, if we go in closer, that volume was slightly below yesterday's level. However, it doesn't matter when it's this close together. We would need to see a volume surge like this, or this on an accumulation day or like this before I would even start to worry about volume being higher or lower or this or that. So for right now, volume's about equal. The percent gain, not nearly as much as the percent loss. I want to show you how also to keep things in perspective. This one I'm about ready to draw here is a downtrend line. So the market is still in a downtrend. I know the two white lines make it difficult to read, but this here is still making lower highs. So those lower highs combined with these lower lows, let me go ahead and I don't want to use that one. Trend lines are kind of up to your discretion. Kind of like to go through some intraday levels. Still, the main downtrend is obviously seen in October as we get lower and lower and lower. So lower highs, lower lows overall is not good. I don't know why I hear people calling up Cramer and saying, "Booyah, Jim, I'm extremely bullish on the market here." Or why I even hear people saying that there's a bottom in the market. Listen, folks, unless you see this huge volume right here in September on these lows, and then we reverse and they have a follow-through day on strong volume, and we have leaders showing up that look like stocks that I'm not going to show you in part one, but I'll show my subscribers in part two, there is no way you should be calling a bottom here. You should be playing defense, be looking to short any move to the 50-day moving average. If that fails, you then wait to the 200-day you cover, obviously, so you can cut your loss short, something a lot of people don't do, which more people should do out there. And then you would re-short at the 200-day moving average. Not until price gets above these two moving average, 50 and 200-day, or the 50-day moving average can upturn and get around the 200 and the stocks can flatten out, should anybody even consider going long? I heard some people calling a bottom in GE. How? This low right here comes on volume that is nowhere near the breakdown in early October. So how can volume be lower here, but yet we have a volume? It's silly. And then at the same time, General Motors. Could this be a bottom? Yes, we have the kind of volume that could be indicative of a bottom. Do you notice in 2005, 6, and 7, out of all the big volume days, the biggest volume day comes here at the low of the downtrend, and even as we go further out, we can see that volume's never been that high on that reversal date. Since then, there's been another big up day, and the stock is up 68%. So can you say General Motors is bottomed? No. Can you say General Motors is possibly bottomed? Absolutely. Let's look at Ford. Could we say Ford is possibly bottomed? No. Why not? Because I see volume in 2006 that's larger than 2008 right now. On this low, volume doesn't look nearly as big as even the reversal of yesterday or the volume back in April. So how can I think that Ford's bottomed? If anything's bottomed, General Motors has. But who even cares about bottom calling? Because there's so much resistance in this stock, all the way up to at least the 30s, that for it to make any significant price gains, it would take years and years and years. What you need instead are stocks that would look like this. You need stocks that look like this before you go long. So until you have something that's set up with a big bop volume and price surge, you're not going to be going long it. Or else you're going to pay for it with the long time frame of not making any gains. The best stocks are already in uptrends, base out, then break out to start another leg up. If you're not part of those, you're part of the laggards. And I hate to tell you, stocks of the past never lead again in the future. If you're looking for dividend safety, that's fine. I'm looking to make a living. I can't make a living that way. Now I'm going to go and move on quickly to the other indexes. Look at the Dow Jones Industrial Average rally today. I want you to notice that the volume is lower than the day before, and it doesn't cover nearly as much ground as was lost yesterday, and volume is below average. So there's absolutely no bottom calling going to be done by me there. VIX index continues to hold the 50-day moving average, which shows the extreme level of volatility in this market. Once again, going back to even a yearly, as you can clearly see, there has been no activity like this in the market since 1987. And 1987 made a nice bottom. We have no indication of a bottom yet. The NASDAQ 100 barely made back any of its losses from yesterday. Volume well below the 50-day volume average, as you can see here. The same thing goes for the NASDAQ. It's impossible for me to think that, oh, definitely we bottom. Definitely. Whenever volume is getting, once again, just like the last time everybody thought we bottomed, lower and lower and lower. Lower and lower and lower. And that's how it's working right now. See the New York Stock Exchange, see the lower volume mix, barely above average. Who cares? More importantly, let's look to see where some commodities are at. Platinum. It's in a consolidation area, trending up slightly. Could be bullish. This could be a bottoming process. However, if you look at a weekly, why try to call a bottom? This thing's in a free fall. Get out of the way. If anything, to be honest with you, as you can see right here, it was as short as it got to the 50-day moving average. So platinum is still in, I guess, what we could call limbo and is not going to go anywhere. And let's for now. Silver's the same way. It's in the consolidation area from October to November. Doesn't really look like it wants to go anywhere in the intermediate term. However, longer term, lower highs constantly, lower lows. So until it breaks out upward or breaks down, there's nothing you can do about silver. And a hint to where things may be going is gold. If gold makes a strong 7% move on 11/21 and cannot hold it like it does not and falls back yesterday 6% and only rallies 1% today, I can agree and understand why some people will buy gold if it hits 600, but I'm sorry, why not wait till it hits 600 or maybe 500, maybe 400, turns around, starts to trend up, and then the 50-day moving average gets back above the 200-day moving average like it did for almost the entire rally going back from 2005. If I would have gone long once the 50 took over the 200 and would have closed only once the 50 was below the 200, I would have gotten a 34% gain there. And had I then done the same thing here, I could have left with another 30% gain. And that's just by doing the moving averages. I mean, if you're a little bit more smarter and can realize that you're in a major uptrend the entire way to the top, you can hold on for a full 126% gain. The point is, it's clearly making lower highs and lower lows. Lower lows, lower highs. A breakout from a small consolidation pattern leads to a rollover as it fails the 50-day moving average again. Can't get above the 200. Now it can't get above the 50. Why would I want to be long gold? Instead, right now, which, you know, they can predict all they want, but right now, the thing I would want to be long is the dollar. Since the dollar's taken the 50 and 200-day moving average, it's up 16%. Since it's broken out of this flag pattern, it looked like it was going to break down and reverse itself, but instead held above the 50-day moving average and rallied higher. Once again, baby tail, baby tail, baby tail showing intraday support along with all of these other tails that are in the United States dollar going back to October. So for me, I would rather be long the dollar than gold. And I'll ask you something. For the past 3 months, who's made money? The perma gold bulls or the perma bear dollars? Dollar bears. What the heck is wrong with me today? Forgive me, folks. I put in a lot of hours every day. I'm bound to sound like George W. Bush every once in a while. So just give me a little bit of slack, I guess you can say. Wow, brain really isn't working tonight. But anyway, I showed you what I need to show you. Basically, all the dollar perma bears, they could turn out to be right. But just like all the perma bears in 1999 that missed all the great stocks in 1998, and all the people that poo-pooed the rally in 2003 saying it was going to fail, well, yeah, it did fail in 2008. For 5 years, we had or for 4 to 5 years, we had a bull market. and everybody denied the bull market, and then it turned into the bear that they warned us about. Had you just ridden the uptrend up during those 4 years and ignored them, and now ridden the trend down like I have, you would have come out a lot further ahead than people like Peter Schiff that predicted it right, and yet we're down 40%, or Bill Fleckenstein that predicted it right in 98, and I believe was down right. It was at least down 30% in 99. Maybe I am wrong. I cannot quite remember. All I know is he wasn't long all of those 500 and 1,000% gainers, or 100% gainers, or 300% gainers that were produced by the internet stocks from 98 to 2000. So I'm going to go ahead and leave it there. Remember, these guys that predict the future, they can get it right, but still, you got to get it right in the stock market. The market doesn't care about your opinions. It cares about where you put your dollar. My worst account may be down 10%, but at least I'm not down 50%. I'm going to go ahead and wrap it up there. Have a great night, everybody. I'll see you tomorrow. Aloha. Part 2 is coming up next.